Everyone wants to take their business, their skills, to the next level. Small and mid-sized business owners have exceptional insight into how to do this. They endure and thrive because they find ways to overcome the challenges that come their way, and they can teach us valuable lessons to apply to our own companies and lives. Stephen Nooner, founder and owner of Alkali, a company with a unique process that helps businesses more effectively buy and manage their insurance programs. And Bob Gibbons, builder of Riata Commercial Realty, a real estate advisor and tenant advocate, are two prominent Metroplex businessmen who, along with their weekly guests, will ask their and your probing questions, finding impactful solutions that will help you reach for the next level. Here are your hosts, Stephen Nooner and Bob Gibbons.
Welcome, everybody, to The Next Level, Conversations that Propel Business. I am Stephen Nooner.
And this is Bob Gibbons.
And we have a very special show for you today, as usual. But before we get started, we just wanted to tell our new first-time listeners what the show is about. We are here to support the entrepreneurial community and facilitate conversations to help us all grow from our guests' experience. So it's not that we have the answers. We're just here to learn and hopefully have some fun along the way.
Sounds good. I'm ready.
Well, we like to start off every show with someone else's wisdom, which is kind of the premise of the show. And this week, we have a great quote courtesy of the internet.
Aren't they all? That could be dangerous,
yes,
actually.
Here we go. The one who says you can't and you won't are probably the one, the one who...
Let's start that over.
Yeah, let's try that. The ones who say you can't and you won't are probably the ones scared that you will.
Scared that you will. So you're saying that's kind of like, I'm going to beat you down. Hopefully you'll believe me, and it's because I'm afraid of you, not because I really think that.
Or maybe I don't want to be left behind. We're great friends, Bob. If you become as successful as you want to be, and maybe I'm going to get left behind.
Yeah, well, I'll have nicer toys anyway. Well, thank you for that wisdom there, Stephen. So our next leveler today, and by the way, we call you next levelers when you're on this show, Brian.
Oh, really?
Yeah, so
that's good.
We forgot to mention that, but you can get a little name tag if you'd like later.
Good.
So our guest today is Brian Wendler, and Brian is the owner of National Business Valuation Services based in Dallas. They have been in business for over 33 years. And they have 7 employees. And what's really interesting is Brian's got so many affiliations that it would take the rest of our time to go through them all. So I'll just mention he's accredited in business valuation, that's ABV. He's an accredited senior appraiser, ASA. And there's all kinds of other alphabet soup going on here. But the thing that really grabbed me most about his bio was that he's done over 20,000 business valuations. And he's trained over 2,000 business brokers. That's pretty awesome. I mean, that's huge. So welcome, Brian. Glad you're here.
Thank you very much. Just a comment on that. I was in a very fortunate position to be with one of the largest business brokerage operations in the country from 94 through 2002. So that's really where I was able to get to know the business intermediary, business broker community. Actually, one of those gentlemen that came through that program now has the largest business broker franchisor company in the country. They're in about 30 states with about 200 or so agents. And so we do a lot of work in the transaction world, and there's not a whole lot of people that have had that experience. I mean, I can't find anybody else in the country who was able to kind of get in the inside track to support, advise business intermediaries when they were trying to either buy or sell a business for a client.
Right. That sounds like a great experience.
Hey, right place, right time. That's good.
Well, speaking of right place, right time, that's something to be thankful for. We like to start off every show with gratitude. So what are you most grateful for right now?
Oh, wow. It's got to be family, friends, health, and I think probably my spirituality.
Great.
All great things.
You want to tell us anything more about that?
Well, I think... which one? All of the above?
Hey, dealer's choice, man.
Well, I tell you, I think from a spirituality standpoint, it's you build strength through, prayer and your love of God and worship of God and prayer. And that's a very important part of our lives. Family is just so incredibly important, supporting them. And, now a grandchild And
congratulations.
Thank you. And just being able to have the flexibility to spend quality time with family, friends.
That's great. Well, let's jump into it today. We're really interested in knowing a lot about what you do and the impact that it has on so many people. So I guess where I'd like to get started is describe for our listeners, if you will, what is a business valuation and why do people get them done?
Okay. Well, first of all, if you're an owner of a business or a practice, you really do need to have a business valuation or your practice valued from time to time, just to understand where you're going. In the financial planning industry, they've got one of these sayings that people don't, plan on failing; they fail to plan. If you don't know where you are going, how do you know how to get there? So that's just one tool to figure out, is the business or practice on track? And so primarily what we're going to look at when we do a business valuation is we're going to bundle up all your financial statements, tax returns, ask a multitude of questions, look at margins, ratios, look at the trends. We're typically going to use an income approach, which is one method that we'll use. We may use a couple income approaches, it just depends. And then we're going to look to the transaction world. In real estate, they call those comps. In the business valuation arena, they call those guideline companies, because no business is exactly similar. And so we're going to go to the marketplace and find guideline companies, because there's a lot of data out there nowadays that we subscribe to, so we can get our arms around a practice, or we can get our arms around an engineering firm, even law firms sell from time to time. It could be just your typical manufacturing firm, a landscaping company that just comes to mind. So it could be restaurants. So that's part of the whole process. You normally don't use much of an asset approach, because those other methods are going to have a value that's much higher. And the asset approach doesn't recognize the intangibles that you may have created all those years in building your business, like your goodwill.
Is there certain thresholds of size where typically a company is evaluated under, like a gross revenue versus an EBITDA, or is it specific to industry? Or
All right, wait, but before you answer that question, what is EBITDA for our listeners that might not know?
That's a great question.
Earnings before interest, taxes, depreciation, and amortization. And It is one of your main value drivers out there in the marketplace. So are there specific multiples? Price to revenue used to be in favor, but I think as we all saw through the Great Recession, you got to have cash flow. Cash flow is the lifeblood of the business. Why would you ever price the business or practice solely on price to revenues or price to net commissions, as they do like in insurance agencies? So we take a very hard look, and by the way, we are on the approved list of some of the largest SBA lenders in the country. So when a buyer goes to a bank, wants to get a loan, and the bank's going to run it through the SBA and get the SBA to guarantee it, those businesses in most cases and practices have to be valued by folks like us that have our designations. And so let me tell you, they're all looking at cash flow. They're not looking too much at revenue.
So why on Wall Street are we always so focused on PE ratios? Because isn't that just a multiple?
Well, it is kind of interesting where they focus on price to earnings, and it is earnings. Earnings at that level, earnings matter, after-tax earnings. And obviously, if you peel the onion back, as we say a little bit more, it's really what they're doing with those earnings, the cash flow that the Wall Street firms are generating. At the privately held, in the privately held arena, you're maybe not focusing that much on after tax, because everybody has different tax structures, but you certainly are focusing on pre-tax profit, the reinvestment in the corporation, how much are they spending on capital expenditures. Cash flow is the lifeblood of the business again. So you're really focused on cash flow, earnings, what those trends are sales growing, things like that.
And what is it about, I've noticed that as the companies grow, a lot of times, at least in our industry, I've noticed that the multiple seems to increase as that cash flow increases. What's the significance of that in regards to a multiplier?
Well, there is research out there that, and certainly what I've seen over the years, when you start getting up above, when you have EBITDA, or what's another value driver would be seller's discretionary cash flow, which is really EBITDA, but with the owner's salary, perks and benefits added back. When you get up above $750,000 in those in that range, or $1 million, you do start seeing multiples increase. And what it's basically saying is, there's not only a return on investment, but a return of investment, and there's other opportunities that the companies have to expand and grow. So you're exactly right. There's a big difference between a company that's just paying the owner a salary, and let's say there's maybe another 50, 60,000 in cash flow. So maybe you've got 150,000 in cash flow. That's hardly comparable to a company in the same industry that maybe is generating $750,000 in cash flow. And I'm referring, let's say, to EBITDA, or $1 million in EBITDA. Totally different companies. You really can't compare the two.
Is that because the larger the company is, the more it's seen as an entity separate from the owner of the business, and therefore it has systems in place and is going to have some ongoing value when that owner walks out the door?
You bet. There's excess cash flow. And you hit upon an interesting, another topic that's one of my favorites, and that's personal professional goodwill. What entrepreneurs have got to be concerned about is, as they start growing their company, they are the company. And so the company has a high degree of personal goodwill. Well, as they grow the company and bring in management and other employees, their personal goodwill tends to slow down or dwindle a little bit, decrease. And that's good because the company's getting a better foothold. They're more stable. They probably have maybe better upside because there's other people helping you achieve that success, not just one owner.
What are the key factors to maximize value? I mean, is it what do you see as the biggest multiplier? Is it tech right now? Is it that you have your own product? Is it process, brand? What are you seeing being the biggest, or just having a strategic buyer?
I think if you have a strategic niche that's defendable, you've got to obviously have a good recognizable brand or a good name. Tech's certainly still hot. Healthcare has been extremely hot with all the, I want to say, almost disruptions that's been going on. I mean, there's a lot of issues out there.
Uber.
It has attracted a lot of folks, but it's also driven a lot of folks away until they really understand what reimbursement rates are going to do and how this is all going to shake out. But you know what? What's nice is there's always room for good, solid businesses that are producing ever increasing levels of EBITDA, cash flow, that don't have a concentration of customer risk, that are diversified, and that show good growth at the top level as well as at the bottom level.
So for the general business owner listening here, like that isn't even thinking of selling right now, what are some key principles, some handles, if you will, that they can apply today so that later on down the road they're going to be in a good position?
Well, when's the last time that you really had an outside independent, knowledgeable party like scrub your numbers? Analyze your financial statements, maybe over a 3 to 5 year period, and really dig into all your expenses. Do common size type of analysis, not only on the balance sheet but on the income statement, and ask some really tough questions. Why are there variations? They've got to get their accounting under control. They've got to make sure that they've got great books. You don't know how often we run into companies that just don't have good books, and of course that's going to impact a buyer's attitude as to what they're going to pay for that. It will also impact deal structure. If I think the books are not in good shape, I might require an earnout. I may require the seller to totally finance it. And if the numbers don't come in right, the seller doesn't get paid. So preparation, get it valued, understand where you are. And then from a financial planning standpoint, you need to look at the gap analysis. Are you there where you really need to be to retire?
Great. Thank you for sharing that. What happens when you work on your biggest deal for a year or more, and then at the very last minute, it blows up? Stay tuned, and we'll catch you and find out.
And now, Confessions of a Recovering Landlord.
This is Bob Gibbons with Riata Commercial Realty, and I am your recovering landlord. After 20 years as a landlord, I now use that experience only for the benefit of companies that lease or buy office buildings and warehouses. Today's confession: don't renew, renegotiate. So you're probably wondering what the difference is between those two. Well, renewing a commercial lease usually means that the rental rate changes, but not much else. That could leave a lot of money on the table. Don't get lulled into the misguided idea that a great relationship with your landlord or leasing agent will result in a good deal for you. And never, ever tell the landlord that you really want to stay in the building. Instead, you need to renegotiate. That takes a comprehensive look at your needs and puts everything on the table for renegotiation. options, improvements, free rent, and other lease clauses. Bottom line, the landlord should have to compete for your business instead of just assuming you're going to stay. To learn more, contact me at texastenantrep.com. Again, that's texastenantrep.com.
Want to create a breakthrough in your business or personal life? Here's a tip. Stop shopping for insurance and insurance agents. Begin looking for a way to more effectively buy and manage your insurance. At Alkali, that is exactly what we provide. The freedom you create by changing this mindset alone will make an impact. Plus, you can stop listening to all the insurance commercials on TV and radio, unless they're funny, of course. Are you an insurance novice or just want to take things to the next level? Knowledge is power. Come join us for the single most important class that you never took in business school. We have the following upcoming classes that we teach through Collin College and the Small Business Development Center. Thursday, November 19th, Protecting Your Business 101. To sign up or learn more, visit us at alkaliservices.com. That's alkali, A-L-K-A-L-I, services with an S.com.
My name is Dave Schmidt, and I'm the president of Schmidt & Stacy Consulting Engineers, Inc., and I'm taking my business to the next level, and appreciate Bob and Steve's time, and looking forward to watching their show in many, many years to come.
Welcome back to The Next Level, Conversations that Propel Business. We're here with our guest, Brian Wendler with National Business Valuation Services. You can learn more about his company at his website, nationalbvs.com. And Brian, one of the things that I wanted to ask about was whenever somebody goes to sell their company and the buyer of that company is going to absorb that business into their own company versus buying it and leaving it as its own separate entity with its own identity, is there a big difference there in what they, how they buy it and what they buy it for, what they'll pay for it?
Great question, because what you're kind of getting into is the pool of buyers who are out there and also the standard of value. Under most valuations, our standard of value is fair market value, and that assumes a financial buyer. That's someone who's going to need to pull out a salary, perks and benefits. And so that standard of value is what typically you use when you're valuing more smaller businesses. But on the other hand, if you know that you've got a special type of company or practice that could be absorbed by a much larger entity, or let's say the seller has had some discussions already with that type of buyer and needs a valuation, well, that changes the standard of value from fair market value to investment value. That means that buyer is probably a synergistic strategic buyer. And in the example you gave, they may pick up the business, the book of business, possibly the machinery equipment, and absorb it into their own facility. So there's rent that's going to be eliminated. They may have key management already in place where they really don't need the seller to stay on very long. So they're going to free up the seller's total salary, perks, and benefits. They could have distribution channels that are much better than the sellers. So there could be some cost savings there. It's obvious that they're probably going to increase sales. The issue with a synergistic strategic buyer, though, is that you really got to research who that buyer is and understand what their attributes are, their characteristics, in order for you to kind of tailor the valuation as to, well, here are these extra benefits that might come to pass, and here's the additional value that the company is worth. Here's the additional premium, let's say, over fair market value. And you can quantify that if you have good information about who the strategic buyer is.
Okay, so the follow-up to that then is, though, when you're doing a valuation, do you assume it's going to be a financial buyer or a strategic buyer? Or, I mean, when you're doing the valuation for the seller?
Well, in most cases, you're going to assume, first start off with fair market value. And as a base case, we'd want to know, well, what is the value under a fair market value assumption? So there's going to still be rent. There's going to be a full owner operator salary. So you're not going to get the strategic add backs that you would from an investment value approach. Then the next step we would do is we would conduct another valuation using those strategic benefits and come up with a higher value. So you know what your playing field is. And what you try to do, as you know, we do some transaction work where we'll help folks after the valuation process bring their companies to the marketplace or perhaps go directly to a buyer. Well, what you're trying to do is capture as much as that premium over fair market value for your seller as possible. Now, on the flip side, the buyer doesn't want to pay all of that premium.
Right.
And so that's the battle.
Okay.
how often do you rain on people's parades? I mean, I gotta think that people they think they've got a $10 million company, and sometimes they talk to you, right? And that would be me right now. I mean, I know I'm not a rational person if someone wanted to buy our business,
That's still your baby.
How often, does that happen to you, and what do you do in that scenario?
I just had a valuation yesterday where the owner thinks the business is worth $15 million, and for the business, we came in at about $1.3 million or $4 million, and he's got real estate of about $3 million. And my question to the broker is, how in the world could he think that? Because the cash flow doesn't nowhere support. All you'd have to do is just run some numbers. If you have total cash flow of X amount, look at it like from a lender. They're going to want a debt service cushion, and then you start taking out what principal and interest would be. You could do that as a present value of an annuity. You can punch that into your calculator. After you subtract out what a new owner's salary would be, capital expenditures that you have to do every year, maybe a little bit of working capital. After you narrow it down and come up with that payment that's available, you can back into how much debt you can muster to buy the business. Wow. And it's just pretty simple. So it's disheartening when you run into that, but that's where faith, perseverance, that's where all that transaction experience come into play, because we're generally right. I mean, we're generally within a pretty good range. There's got to be some fundamental issues. There's something lurking out there in the background that would make this person think that they're worth $15 million. And maybe there's a synergistic, strategic, who knows what out there.
So that was a low day for that guy. And speaking of lows, we're going to switch gears a little bit. So over the last 12 months, just looking through your business, your life, financial, family, physical, mental, what would you say would be your biggest low?
The biggest low, maybe it's not convincing people that they need to do what they need to do. Planning is just fundamental,
right?
But yet hardly anybody plans, it seems like. I think the majority of business owners out there don't really have an exit transition plan.
Why do you think that is?
We are so frazzled. We are so busy. There's so much going on. And I think the one big thing is there's uncertainty. It seems like for the last 7 or 8 years, we've had gobs of uncertainty, and we still have it. And things are changing constantly, and it's tough for business owners to focus. And when they go home at night, they've had it.
Is it also because they just can't ever envision a time when that is not their company?
I think that's it too. They don't want to think about death, disability, some of these other involuntary things that can happen to them. Time is a business owner's worst enemy. You got to have time to educate your family if you're going to do some succession planning. You've got to take time to prepare the business for sale. You can't just do it automatically. And sometimes that takes maybe 1 to 3 years. It depends on which industry you're in and what's happening in the business cycle.
We've talked a lot about sales of businesses and why you need a valuation when you sell a business, but what are other circumstances in which you need the business to be valued?
Well, let me just touch on one other thing. Okay. The reason why sellers should have it valued is because when a buyer comes in, the buyer's going to ask, well, who valued it? Well, they know if the seller did it, they're going to start laughing. Right. If the seller's CPA did it, they're going to laugh, because whose side is the seller's CPA on? Sure. So when you want some independent third party to be able to say, this guy did it, he's got all these valuations, designations, and then your question again was?
What other circumstances would there be other than sale?
Well, you've got plenty of reasons for valuations. You've got, unfortunately, family law, divorces. Okay. It happens, where we're brought in to decide what the marital estate would be worth. Partner buyouts. You've got gift and estate tax. You've got all of the SBA lending that's going on out there, where if the business is a certain size, you're going to have a business valuation. So there's plenty of reasons. There's purchase price allocation work for tax purposes. When companies change from a C to an S corporation, it's advisable that they get a valuation and put that in the file in case they sell within the time period that they could be double taxed on it. They could be taxed and have a penalty. So plenty of reasons for business valuations. And we also do machinery equipment appraisals as well.
Okay.
with the downturn in the oil sector, we're hearing from folks that we may be doing more machinery equipment appraisals. Unfortunately.
They might be no more 10 cents on the dollar people. Huh?
Unfortunately, yes.
Yeah. Well, good time. On the other hand, good time to start if you want to get in that business maybe. What about a high? Last 12 months, looking back, what's your biggest high?
I think it's just being able to have the flexibility to travel, be with my family, and the business keeps operating.
Where are you traveling?
Most time it's Singapore. My oldest daughter lives there, has been there for about 3 years, and our only grandchild, our grandson's there. So it's extremely important to be able to, get out of the house, so to speak, and have fun with family, but yet, stay in touch with the customers and the employees.
Very cool.
Love technology.
Yep.
Let's take a look at, one of the things we like to have all of our next levelers talk about is sort of what have you overcome? So what's one of the big breakdowns that you've experienced that has turned into a breakthrough for your business?
Well, I think in a lot of cases, being an entrepreneur, you're always wondering, well, will this business work? Will they come? If you form it, if you create it, will they come? That was one. And of course, having the background I had and training all those business brokers, business intermediaries, they liked the work we were doing. Mm-hmm. What's interesting about that work is you give a broker an opinion of value, a valuation, then they list the business and take it out into the marketplace. Well, you get some pretty good feedback pretty quickly if the business sold, if they've got interested buyers. So over the years, we've built that up, built that reputation up to kind of being that our core values are, we tell people what they should be told, just like the gentleman that thought his business was worth $15 million. I think that's maybe another issue is just as an entrepreneur, you're so busy, and sometimes you put things off that you think you can. Well, I'll do that tomorrow. I'll do that next day. You know what I've learned over time? Do it now. Don't put off anything that you can do today. So I think that's just a mental realization and it's funny, I've run into other folks that kind of have that issue, but we're all so busy again.
So you're saying if you're going to procrastinate, do it tomorrow?
That's right.
Where do you have to focus most to stay on track with your firm and you're traveling internationally? I mean, how do you stay focused?
Time management, having good people, not chasing rainbows. And just being real, I think communication is so important, being real upfront and setting client expectations, setting client directions. And we've got a pretty good process down. I mean, after doing this for so many years,
sure,
we have a pretty smooth, well-oiled, machine.
Good. So what are the three big insights that you've learned over your career that you would give somebody who was young and starting out?
Well, I like to saying, some will, some won't, so what? As an entrepreneur, you're going to run into folks that don't believe that you can do what you can do and that won't do business with you. You've got to be able to take rejection, persevere, get through the adversity because things will work out. That's probably the biggest thing.
If we were sitting together, if we're looking at it, if we were sitting all together here 3 years from now, and we're to look back to today, what needs to happen in your life, professionally, personally, for you to feel satisfied with the progress you've made?
I think perhaps doing more in the transaction world. I've got a good base now of valuation analysts and senior analysts, which will allow me to free up more and more time for the transaction world. That's really the space that I came out of. So we can really help families who are needing transaction work, and that's exit transition planning. Sometimes that revolves into or rolls into actually selling the business or the practice. My brother, who's an attorney, one time said, well, Brian, you ought to be doing some expert witnessing. We do some litigation support. And I said, well, why is that? Well, you've got all this experience. Most of the people that he runs into don't have nearly the experience that we've got.
Well, Brian, thank you so much for being our guest today.
Yeah, thank you.
You've been listening to The Next Level, Conversations That Propel Business. If you'd like to learn more about our guest, Brian Wendler at National Business Valuation Services, please go to his website, nationalbvs.com. If you'd like to learn more about the show, go to nextlevelshow.com, where you'll be able to find today's conversation in audio format and video. And you can also listen to everybody that we've had on in the past, see who's coming up in the future. And you can, of course, connect with us on social media.
And you can see if you notice the difference in the set today.
Yeah. All right. Thanks. We'll see you next week.
Have a great week.
You have been listening to The Next Level, Conversations That Propel Business with Stephen Nooner and Bob Gibbons. Join us every Tuesday at 1:30 p.m. for more prolific conversations that will take your business to the next level.